Hello and welcome everyone. In today's video, we will be discussing Excel applications in financing decision, where we will be doing a question on calculation of cost of debt. So here's a question. A company issues 10 lakh 12% debentures of rupees 100 each. The debentures are redeemable after the expiry of fixed period of 7 years. The company is in 35% tax bracket. Required, calculate cost of debt after tax if debentures are issued at par, 10% discount, 10% premium, and if brokerage is paid at 2%, what will be the KD, that is cost of debt, if issued at par? So, when our debentures are redeemable, then we use this formula, that is interest into 1 minus t plus redemption value minus net proceeds divided by n whole divided by redemption value plus net proceeds divided by 2. Here, when we have a question on debentures issued at par and we need to calculate the cost of debt, as we know that debenture value is rupees 100 for each debenture, then with this formula, we can reduce it to this only, that is KD is equal to I 1 minus T. How? Here, I will be the interest amount, 1 minus T plus 100 minus 100 divided by N whole divided by 100 plus 100 divided by 2. So here, after cancelling everything, and we will be left with I upon 100 into 1 minus t. I upon 100 will give us the interest amount in percentage into 1 minus t. So here, cost of debt is equal to interest, that is the percentage interest, and 1 minus t. So we will reduce to this formula. So we can calculate with both the formulas in order to see that whether we're getting the same answer or not. So debentures issued at par, we have some critical data. Rate of interest is 12%, par value is 100, total debenture amount is 10 lakhs. So number of debentures will be 10 lakh divided by 100, that is 10,000. Tax rate is 35%. In order to calculate KD, we can use this smaller formula here when our debentures are issued at par. So here it will be only 12%, that is D25 into 1 minus 35%, that is our tax rate. And if you want to do with the bigger formula here, you can apply that also. So here you can see D25, that will be the 12% into 100 will give you the interest amount I into 1 minus T, that is your tax rate 35%, plus redemption value, nothing is given to us. We are assuming we are redeeming it at par. So 100 minus the net proceeds, that is your issue value 100, divided by number of years of redemption n, that is 7, whole divided by D26, that is again 100 plus 100 divided by 2. So here you need to keep, you need to use brackets very carefully in order to get the right answer. So here you can see that the first term, this term basically explains the interest amount. This explains the 1 minus t. This explains the RV minus NP divided by N. And this explains the RV plus NP divided by 2. So just be careful with the brackets, and when you enter, you will get the same answer. You can convert this into percentage terms if you want. So here you will get 7.8% as your answer here. So same answer we're getting with both the formulas. So your choice what you need to do. Only in case this formula will be used when your debenture value is just 100 rupees. Now debentures are issued at discount. Here rate of interest will be 12%. Critical data will almost remain same. Par value is 100. Total debenture amount is 10 lakhs. Number of debentures is 10,000. Tax to 35%. Now our net proceeds or net price will be 100 minus 10% of 100. 10% is the discount rate. So 100 minus 10% of 100 is 100 minus 10, which gives us 90 as the net proceeds. So here we can calculate our KD as simply with that formula only. So here 12 into, so instead of using the 12% into 100, you can directly write 12. That is 12% of 100 will give you 12 only. 12 into 1 minus tax rate. Again, the same formula. Redemption value minus net proceeds, that is 100 minus 90. And here also redemption value plus net proceeds, that is 100 plus 90, will give you the answer as 9.71%. Now, when debentures are issued at premium, then again your critical data will remain same except your net price. So here rate of interest is 12%, par value is 100. Again, tax rate is 35%. Net price will be 100 plus 10% of the issue price, that is 110. Interest amount, we can directly write 12, that is 12% of 100. And redemption year is 7. So that instead of writing these, we can take them as cell referencing. Okay. So here you can calculate your cost of debt with the formula given, that is D52, that is your 12 into 1 minus tax rate plus your redemption value minus your net proceeds divided by your N, that is 7. So you have taken, instead of writing 7 down, now you have taken that also in cell referencing, whole divided by redemption value, that is 100 plus 110, that is your net proceeds, divided by 2. So with this, you can calculate your cost of debt. So just be careful with the brackets. Now, if brokerage is paid at 2% and your debentures are issued at par, then what will be your cost of debt? So everything remaining same. Okay, the only difference is now our net price will be 100 minus 2% of 100. That is 98 rupees. And interest amount is this. Everything remains same. Only our net proceeds are different. So with this, you can calculate. So D52, that is your 12 into 1 minus tax rate plus 100 minus 98 divided by 7 whole divided by 100 plus 98 divided by 2. So here these D47 represent your redemption value. D66 represents your net proceeds. So by this, you can calculate your cost of debt. Similarly, you can get questions on calculation of cost of equity, cost of preference shares, cost of retained earnings, and even cost of irredeemable debentures, cost of irredeemable preference shares. So what all formulas are there for calculation of cost of debt, cost of preference share, cost of equity, or cost of retained earnings? You just need to apply them in Excel, because there is no sure shot method, or there is no built-in function which helps you in directly calculating the cost of debt, equity, preference shares, or retained earnings. You have to apply the formulas that you studied conceptually or theoretically and apply those terms by using cell referencing in Excel. So I hope you understood the question. Thank you so much for watching. Bye-bye.